Hi there, good morning. You've tuned into ET Now, and this is Buy Now Sell Now with me, Shell D'Souza. Along with me, I have Shrishti Sharma. Very good morning to you, Shrishti. And if you look at the markets, all new all-time record high coming in for the benchmark indices in today's trading session. We're comfortably above that 18,900 mark. Looks like the new NSE pin code 20,000 is just a few points away. That's exactly how it looks like. But yes, remember that yesterday the rally was led by HDFC Twins, and today we are continuing on that good breadth coming in for the markets. Like I said, the advance decline ratio right now is in favor of the advances. If you look at Nifty, yes, record high levels, 18,900 is what has been surpassed, 100 points uptick coming in for the benchmark indices. Sensex 2 hit a fresh record high in today's trading session above 63,700 mark. Talking about Nifty Bank, tad bit of underperformance when compared to the benchmark indices. Nevertheless, is seeing gains of about 0.3% in today's trading session. Let's talk about the list of gainers. Then it is the Adani Enterprises that's ruling the charts on the Nifty today. Remember, a huge block deal has taken place in Adani Enterprises as well as Adani Green in today's trading session, but the details are not known as yet. Yes, JSW Steel, that is in focus. It is among the top Nifty gainer as well. 2.5% uptick coming in for JSW Steel. Remember that yesterday, after the news about the HDFC and HDFC Bank merger actually started doing the rounds, you had a lot of brokerage notes coming out, and you had one of the notes from MOSL which said that JSW Steel would be likely entrant into Sensex 30. But apart from that, you have Tata Motors that is seeing an uptick of about 2.5%. Adani Ports higher by 2.5% as well, and Titan also is trading higher by about 1.5%. Let's talk about the list of losers. There's only a handful of losers in today's trading session, and to put it into context, only 7 stocks are declining in trade today, and among those it is HDFC Life that is trading low by about a percent. Hero MotoCorp is also trading low by about 0.6% in today's trading session. Let's take a deeper dive into the sectoral indices and see which all sectors are bucking the trend today. All of them are actually seeing a sharp up move. All of them are in the positive territory, with the metal index taking the lead of about 1.5% in trade today. But let's talk about the markets. Where is the market headed from here on? Now that we've scaled an all-new high, we are coming to the end of the June series. We will be entering a new series come next week, or rather, come next week, come on Monday, or rather Friday. Let's talk about all of this and put this into context with our experts. We have Ashish Kapoor as well as Kunal Bothra joining us on the show. Very good morning to you, Ashish, as well as Kunal. Thank you so much for joining us on Buy Now, Sell Now. And Kunal, let me come first to you. It's expiry today, given the fact that our holiday also has shifted. Also, where do you see the markets headed from here on now that we've scaled a new high? Are a lot of struggles for Nifty?
Good morning, Srishti. So I think it's been a brilliant achievement for the Nifty to scale past about the new highs. And finally, after I think a test of more than 2 or 3 weeks, we've managed to surpass the 18,888 odd mark for the Nifty on the spot level. So it's been a remarkable move for the index. I think it took almost 208 days for the Nifty to scale past about the previous highs made on 1st of December 2022. Now, I think what distinguishes this market rally as compared to the previous time when the Nifty was at an all-time high levels is the manner of the sector rotation as well as the breadth of the market. Mid-caps have led the rally in this last up move, almost a 2,000 point rally for the Nifty mid-cap index, if I'm not wrong, from 8,200 levels to now approximately 10,000 mark. And many of the large cap sectors as well as stocks have made a phenomenal comeback, be it the defensives like pharma, FMCG, or the high beta stocks like the real estate, etc. There are so many sectors which have been more vibrant in this up move for the index, and that I think that's the distinguishing part of the up move, which means that when the market breadth is very wide, we expect the moves to sustain. So what I'm expecting, at least from a near-term play, is another 400 to 500 point scale from the previous highs of 18,888. So which means broadly 19,400 to 500 could be the next target range for the index.
All right, so that is the next target range coming in for the index. A very good morning to you, Ashish. And Ashish, which are the sectors that you think will lead the markets ahead? Everyone's rooting for the banking sector, but do you think there will be surprises?
Yeah, I think, of course, a big achievement, Nifty all-time high. And I think more than just the number, I think a great time to review your portfolio, look at what stocks you have, because clearly the market is in a very strong bull trend and great time to consolidate and make money. I think that are sectors. I think banking would always, banking and financial services would always remain a favorite sector because given the kind of penetration which we have and the kind of forward-looking numbers which you're going to get from this sector. Apart from that, I think consumption would remain an all-time green favorite theme here. So consumption would mean not only FMCG but also consumer durables, and also the third would really be the changes coming in by the infrastructure. That can also be capital goods. It can also be in the digital space. It can also mean consumer durables, which are going to get the benefit of power and other infrastructure reaching remote areas. So I think broadly, consumption, capital goods, banking would be the themes going forward. And of course, stock specific would be the mantra. I think within these sectors, it's best to have a stock specific focus. And you will stock winners even in the sectors other than the ones which I have mentioned. So clearly the focus should be on getting your stock selection right. And of course, your asset allocation at the broader level, because try and not extend, into equity more than what you can hold. So very important not to get carried away by these numbers and not to overextend yourself. Stick to your asset allocation and focus on stock selection.
Okay, so stick to your asset allocation and focus on stock selection. That's the wise advice coming in from Ashish at a time when Nifty is touching its new highs. But with this, viewers, it's time to slip it to a short break. But don't go anywhere. As we come right back, we'll be taking all your stock-related queries. So stay tuned.
Welcome back. You're watching Buy Now, Sell Now on ET Now. A brand new day and a brand new record high coming in on the benchmark indices. Nifty has comfortably scaled past the 18,900 mark. But remember, you need to watch out for the top gainers on the Nifty in today's trading session. Adani Enterprises is one particular counter that is seeing a strong up move, 5% uptick coming in. And as you can see on the top of your screen, or rather bottom of your screen, we have an exclusive story on that particular front. And I believe Ajay is standing by with the exclusive details. Ajay, big block deals taking place in Adani Group counters today, and I believe you have all the exclusive details on that particular front.
Well, that's correct. Adani Group stocks just, keep on surprising the market. And look at what has happened this morning. There were two block deals which happened early this morning in Adani Group stocks. One Adani Green, the other Adani Enterprises. And our sources are telling us from the market, the top of the market circles who helped, get this deal done is that GQG, Rajiv Jain, yes, that name is back in Adani Group stocks, has brought in almost $1 billion worth in these two stocks in early morning trade. Along with other marquee names, global investors have also come in. So this is a big news which is coming in. This is the second or third time that, in fact, third time if I'm not wrong, this is the third block which has happened. They had bought for the first time after the report and have already also been buying from the open market purchases. So the GQG is clearly one name consistently accumulating and buying Adani Group stocks. Today, the $1 billion blocks which has happened, the participation also came in some other marquee names from Middle East, from Europe as well. So this is something interesting to watch out for. Remember, GQG, Rajiv Jain has made a hell lot of money betting on Adani Group stocks at the peak of pessimism, and look at how all the news flow has come in. The stocks have rebounded very sharply, and Adani Group stocks are in focus. In fact, the weekend gone by, Saturday, management to one of the agencies had given out commentary on how they are focusing on increasing their EBITDA over the next 2 to 3 years, the group EBITDA. And Monday till today, we are seeing consistent gains coming in. And today, of course, big buying coming in Adani Enterprises and Adani Green in the form of block deals from Rajiv Jain and his friends. So additional $1 billion worth of purchase in Adani Group stocks. That's a big exclusive we are gathering.
Absolutely. Thank you so much for that, Ajay. And given the fact, like you mentioned, this is approximately the third time that GQG has gone ahead with their investment in Adani Group, just shows that their faith in this particular group. He did mention that to us in his exclusive interview, isn't it?
Well, that's correct. We always break, big exclusives here on ET Now, and people who are following our exclusives very closely, make a lot of money as well, and by joining the dots, etc. Look at how the results actually came in of Adani Group stocks. Look at how regulatory side reports have come in, including the committee which has been set up, and of course the commentary regarding the roadmap of the group's profitability from here on. All of that is falling in place, and big flows are also coming in. These are practitioners of money management. These are big money pots. They look at valuation and the prospects and risk reward and allocate money. And if they are, buying additional money, additional worth of equity in the stock, there must be some strong rationale to it. But right now, there is a good movement also post those block deals in both these stocks. In fact, all the other Adani Group stocks also witnessing good momentum in trade.
Thank you so much for that, Ajay, for joining us and getting us that big ET Now exclusive. And we have sources have told ET Now that GQG and other investors have bought around $1 billion of additional stake in Adani Group stocks via block deal today. We know the block deals in Adani Enterprises and Adani Green took place today. Let's talk more on this and how one should make of this particular development. We have Vineet Bulunjkar joining us on the show. And Vineet, thank you so much for joining us. And looks like another big bet coming in from GQG and other investors for the Adani Group.
This was more on expected lines that the deleveraging would continue and new investors would be entering the stock. We believe that the story of Adani is very much intact, and barring for the ruffles created by the Hindenburg report and the following SIT order by the Supreme Court, this stock should be trading much higher. We believe that once the final verdict of the Supreme Court is out sometime in August, mid-August, is the time when we think that the shadow of these the factors which are negative and preying on the stock will be behind us, and investors after that period would be wondering why they never bought into that stock. So we continue to remain bullish. We believe that the story is very much on track. The growth factor is going to be the hydrogen vertical, and we believe that will be played out going ahead.
Absolutely. And Vineet continues to remain bullish on the Adani Group counters. Thank you so much, Vineet, for joining us on this big development that we are picking up right here on ET Now. Sources have told ET Now that GQG and other investors have bought around $1 billion of additional stake in Adani Group stocks via block deal today. Remember, you had 2.2% equity block deal take place in Adani Green, 1.6% equity stake block deal take place in Adani Enterprises, and both of these counters are soaring in trade, and not just both of them, all the Adani Group counters are pretty upbeat in today's trading session, and that's the exclusive story that you've heard right here on ET Now. In fact, first on ET Now. But let's go on and let's talk some more stocks then, apart from Adani Enterprises. Remember, viewers, that this is a show where we get you all answers to your stock-related queries. So let's bring on board our experts. Once again, we have Kunal Bothra as well as Ashish Kapoor on the show with us. Thank you so much for patiently waiting while we get that exclusive news break on Adani Group. Let me get the first query then, and this one is coming from Ghosh Dada. This one is for you, Kunal. He wants to invest right now, and he wants to know which is the best share in defense, IT, pharma, and finance. Either of the two sectors that you can help him with.
So I think from finance, if you're looking at large cap names, rather in terms of banks, if I can probably club it, then I think investing into the likes of HDFC Bank or maybe HDFC as a group could be a good bet from the large cap space. If you're looking at from the mid cap end, I would still believe that IDFC First Bank, maybe closer to 70, 72, could actually be a very good bet from a long-term play. From the pharma pack, I've been very vocal about Glenmark Pharma. I think it looks very attractive on the longer-term charts, and I believe that the long-term trajectory for the stock looks extremely positive. So that's one stock which you can look out for from the pharma pack as well.
Okay, moving on to the next query, and Kunal, once again coming to you because you have been tracking this counter off late, and I'm talking about Samvardhana Motherson. This question is from Bharadwaj, and he has bought 1100 shares at an average price of 82 rupees. His investment horizon is for the next 2 to 3 years. He should stay invested. But what sort of a targets he should be looking at? What's your advice and outlook coming in on this?
See, I think in such kind of a scenario, it of course makes sense to hold on, but I would probably look at the targets in a more calibrated manner. So over the last 12 months, the stock was trading into a range of 85 on the upside to 60, 65 on the downside. So you can probably expect this 20-25 point range to be replicated on the higher side. So 100 to 105 could be the first target which you can consider for Samvardhana Motherson. And assuming if this trend continues for the stock, say for another at least couple of years, then we could be looking at a possibility of the stock scaling towards 50% retracement of the entire fall from 180 mark towards 60, which should take the stock to at least 125 to 130 odd mark. So broadly, 100 to 120 could be a target range potentially for Samvardhana Motherson for the next 1 year at least.
All right. This next one that I have is coming in from Rajashekhar from Bengaluru, who is a senior citizen, and he wants to know whether he can purchase SBI Coal India at current market price. He intends to hold it for the next 1 year, but he wants to know which one is a bet. I will give Kunal a break. I'll ask Ashish this particular answer. No doubt it's just for like a year or so, but amongst SBI and Coal India, which one is a better PSU?
Well, I would put my bet with Coal India simply because I think banks, all of them, including SBI, have run up quite a bit, and Coal India, I think, despite all the fundamental strength, is still hasn't done much. I think its potential is much more in Coal India, and although it will be a little contrarian because SBI has more momentum going with it, but I think with the 1 year perspective, I would stick my neck out and say Coal India.
Okay, moving on, and Kunal, this question is from Kamal, and he wants your inputs on Havells as well as Paraj Industries. Are these good bets to enter for the next 3 to 6 months period?
Well, Praj Industries, I would believe, yes. I think it's a good time to buy the stock. It's corrected also from 400 levels to, I think, 365, 370. So I think price-wise, buying at current levels could be attractive. Even if you're looking at this as a 2 or 3 month kind of a time frame, you can look out for 400 to 420 as a potential target range. Havells, I believe that it's still into a mild corrective phase. In fact, the stock was looking very attractive at the 1350 mark, but it's failed to hold on to those levels. So maybe another 30-40 points correction for Havells and closer to 1250 could be a good zone where you may look to buy the stock.
Okay, this one is the next query is coming from TP Vinod, and TP Vinod is writing to us from Salem, and Kunal, he wants to know about Jupiter wagons or high-tech pipes. He doesn't know whether you track these, but if you do, then what are the good levels to enter and what sort of target should he look at for both of these counters?
Jupiter wagons, I don't track, neither high-tech pipes.
Okay, I'll give that one a pass then. Let me take this next one that is coming in from Manoj Nair from Bangalore. Crompton Greaves, he already purchased at the price of 416. Should he exit or average?
Well, I think we should hold on to the stock as of now. I think Crompton is getting into a recovery phase for itself. The stock has still trading closer to its, or just around its key moving averages. So I believe that the bigger part of the trend for Crompton could probably resume. And I believe that the markets are getting into a phase where many of these underperforming stocks could actually make a strong comeback. So I think in that regards, you should continue to hold on.
Okay, but with this fears, it's time to slip into a short break. But don't go anywhere. We'll be right back in order to take more of your stock-related queries. So stay tuned. Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all your stock-related queries. But let's have a look at what the markets are up to, because there's been no stopping for both the indices. As of now, Nifty is scaling to new highs. 18,953 is the level that you're watching on the screen, and after taking a bit of a breather, then Bank Nifty is also seen to be catching momentum, now moving above that 44,350 odd mark. But let's get back to taking all your stock related queries then. And Ashish, coming to you for the next one. This query is on Granules India, and the viewer named Supratim Chakravarti has 100 shares at an average price of 290 rupees. The question is, do you think it would be good to keep buying this particular counter in installments, and what's the outlook going ahead?
Yeah, I think it's quite a good story, and I would say yes, you can go ahead and buy it in installments, try and average out your price, and I think the outlook is certainly positive, and I think I don't have a target in mind, but I think over the next few years this should trade much higher. It's a very good story, and I think the story is still shaping up, so there is a lot of potential on the upside.
This next one is for you, Kunal, and this one is from Mr. Mati. He's writing to us from Trichy, and he wants to know whether it makes sense to buy, or rather he is planning to buy Brightcom, And he's asking what's the good entry price. He's planning to hold it for 1 year. Do you think that this counter really makes the cut for to be a part of anyone's portfolio, even if it is for the matter of 1 year?
Not really. I think it's a high beta stock, and I don't track it, frankly, Cheryl, because the volatility into the stock is extremely high. The stock was at 120 just about 1.5 or 2 years back, and from 120 the stock fell down to as much as 9 rupees. So the risk associated with these stocks, is extremely high. So I think it's better to stay up.
Okay, the next query is on Canfin Homes and Ashish. This question is from Ravi Shankar. He's holding 1,000 shares at an average price of 742 rupees. Is that a hold or sell at this point in time? He says that he's not an investor, so probably for a trading bet. So, Ashish, let me give it a skip for you and Kunal. Canfin Homes, on technical front, how are you tracking this particular counter?
I think it's an excellent chart, Canfin Home. Last 3 months, consecutive price uptrend for Canfin Homes. One of the very few, financial services name or NBFC stock, which has actually hit back its lifetime high levels and crossed about those highs for itself. So I think it's a phenomenal comeback for Canfin Homes after years of consolidation. I think even at current levels, it looks attractive, but a better price could actually be maybe closer to 755, 760 for Canfin Homes. So even if you're in from a trading bet, I think 755 to 760 could be a good price where you can look to buy and then look on to ride this huge uptrend for Canfin Homes.
Okay, this one is coming from Rajendra K, writing to us from Bangalore. He has bought Yes Bank, 3,000 shares at an average price of 56. Vakrangi, 1,000 shares at an average price of around 39.73 rupees per share. He's in a huge loss, Ashish. He wants to know what should he do, exit both of these counters and look to invest in some good quality names.
Well, I think while I agree that Yes Bank, given its presence and given its size, would at some point of time in the future quite likely turn around and the investor could get his price back and maybe even make money. But I think I would suggest him that he can recover faster if he takes loss, take a hit. It's a big one, but take a hit and put your money into IDFC First Bank. I think IDFC First Bank is clearly turning around. There's a lot of interest in the stock, and I think you will recover your money much faster by riding on a winner rather than staying put in a loser. So yes, it may be very difficult to book such a big loss, but book loss in Yes Bank and put it in IDFC First Bank. My the confidence is that IDFC First Bank will not only give you profit, but it will help you recover the entire loss of Yes Bank much faster and in a much more, let's say, surer way than Yes Bank.
On to the next query then, and Kunal, this one is from Venkat Rao. He wants your advice on LIC housing. He has shares at price of 435. And the other counter is Bajaj Consumers, 300 shares at a price of 208. What he's highlighting, he's at a loss in both of these names. So at what price probably he should average, and will you advise for average or not?
See, I'll advise to hold on to both of these names now. LIC Housing is, of course, not one of the best charts in the entire fin services sector, but then I think the stock is recovering. So I think the recovery in the last 2 weeks or 3 weeks has been quite spectacular for a stock like LIC Housing. Even for Bajaj Consumers, I think this month so far has been quite a fruitful month where the stock is up some 26-27% so far, which means that there is there's momentum which has come back again to these names. You are maybe off by, I think, 5% to 10% on an average from your cost price. So if this momentum lasts for another couple of months, you should at least get back your cost price for both of these names. So I would continue to advise to hold on to it as of now. Then, and closer it comes to your cost price is where I think you can take a call whether you want to exit these stocks and then look to shift to some other formidable names in their respective sectors.
Okay, this next one is coming for you, Kunal, and this one is coming in from Vishal, writing to us from Dubai, and he's asking you about a large cap and a small cap stock which he can look to invest for the longer term, and he has about some 30,000 that he would like to invest in each of these counters. So which are the two stocks that you think that have the best risk reward ratio?
So large cap ones, I would believe HDFC still at current levels would be very, very attractive. to bet on from long-term play. You can also look at maybe Reliance Industries. These are the only two names which I believe look very attractive because these stocks have not performed the way we would have anticipated when the markets are at an all-time high level. So there is a lot more which could be on the table for these stocks from a long-term play. From the mid-cap arena, I would not say a small-cap arena, but the mid-cap arena, I would look at L&T Finance as the other stock. I think it's trading at 120 levels approximately. Would be extremely gung-ho on the prospects of the stock over the medium to long term, and specifically if you are an investor which has a time frame of 2 to 3 years plus, I believe that the potential is significantly high for L&T Finance from that kind of a time frame.
Okay, Ashish, the next query is on Gabriel India. Ayush is holding the shares of Gabriel India as well as HDFC Bank, but what he's highlighting is that the buy price is near to the current market price. Wants to know, can he add more in both of these names at this point?
HDFC Bank, a no-brainer. I think certainly you can go ahead and add more. And I think, in fact, I would go ahead and say that, one of the best large cap picks in the market today would be HDFC Bank. Certainly go ahead and pick. Gabriel India, I haven't tracked, so I don't want to comment. But yes, within the auto ancillary space, there are many interesting names, including things saying like Motherson, Minda Corp. There are many other better names, many other names which I'm very bullish on. But Gabriel, I haven't tracked, so I won't want to comment on it.
Coming in from Satya for you, Kunal. He wants a safe entry level for JTL Industries and Welspun Industries. I think Welspun India is what he's asking about. I'm unsure if you try JTL, but nevertheless.
I don't track JTL Industries, but I think if I'm not wrong, it's trading at 360 levels currently. It's given a breakout on the charts for JTL. So maybe I think if you can look to buy back again closer to the neckline, which is around 335 odd mark, 335, 340, that could be a good entry point for JTL. Welspun India, on the other hand, I think if I'm not wrong, it's trading at closer to 94, 95 levels. Still trying to confirm a breakout of its long-term averages, for itself, and especially on the weekly charts, the stock is yet to provide a confirmation. So buying at current levels and adding maybe closer to 88, 90 for Welspun India could actually be a good strategy for the stock.
Okay, so that's the advice coming in on Welspun India. But with this, viewers, it's once again a time to slip into a short break. But don't go anywhere. We'll be right back.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking all of your stock-related query. And this one is coming in from Sanjay Kumar, writing to us from Hyderabad. A very penny stock, and ideally we actually avoid taking penny stocks on this particular show, but nevertheless, so that we can clear the doubt in all of our viewers' mind why one should not look at these counters. This one is coming in from Sanjay, and he wants to know whether he can buy Ratan Power, Kunal.
I don't like the stock.
Right, but Ashish, what's your take? Do you think that it merits to actually look at these penny stocks, especially at a time when you have markets at all-time high, you have quality stocks that one should look at? What happens is usually people try to dive into these counters to make quick bucks.
And there is no definite answer. I mean, if there is a penny stock in which you have done some research and there is a good likelihood of a turnaround, then why not? I mean, and certainly some of the penny stocks do turn around. I mean, CG Power is a case in example. I mean, a few years back it was down to 6 rupees. I mean, look where it is now. So yes, I mean, there's no hard and fast rule, but generally what you are saying is right. But having said that, yes, if you have some research or some kind of a study which shows that the company is likely to turn around, then these stocks can be great multi-bagger ideas also. But if you are going just for the sake of making a fast buck, then yes, very high chances that you will lose whatever you're putting in these kind of stocks also.
Okay, moving on to the next one. And Ashish, once again coming to you because this query is from a long-term viewer, Pramod, who has bought two counters. Firstly, Sula Vineyards at a price of 400 and Avalon Technologies. He bought these shares at a price of 380 rupees. Wants to know, can he hold both of these names for the next 2 to 3 years?
Well, Sula, I'm kind of confident that you can hold on. I think it's a very good place to be in. And I think the market itself is growing and Sula has a very good name in it. And I think kind of industry in which going forward, more money will be made. So Sula, yes, hold on, certainly hold on. And Even if it does come down to again 400 levels, you can buy more. The other one I haven't tracked.
All right, this one is coming in from RK, and he wants to know whether it's worth betting on Aavas Financiers at the current price for 1 year. Kunal?
Well, I would suggest to buy in small quantities for Aavas Financials because the stock is showing signs of a recovery. In fact, I remember I think almost a week out back or 15 odd days, we had a similar query and I mentioned that the stock is trying to form a bottom formation process at the 1350-1400 mark. It's shown good recovery in the last 1 week or so and on the back of some very strong volumes. I would probably expect that maybe this recovery could have more legs on the upside, but then the data is a lot more short, or the recovery is a lot more short oriented. To try and project it from long-term play. So I would suggest that hold on to it as of now, buy in small quantities, look out for targets maybe at 1650, 1700 and then scale the targets higher as now the trend moves along.
Okay, moving on, and this query is for you, Kunal. The question is from Padma, and she says that she is holding Kotak Mahindra Bank at a price of 1850 rupees, and it's been more than 2 years, and no significant return is what she had witnessed. So going ahead, what's the outlook, and can she also invest into SBI, Axis, or HDFC, any of the names from the banking space you like?
So I think all the three alternatives are much better alternatives. So SBI from the PSU pack, Axis Bank as an emerging breakout candidate from the private sector banking names, and HDFC Bank as one of the more formidable names. In terms of a breakout, these stocks were huge underperformers. So I think it makes a lot of sense to switch from Kotak Bank towards maybe in three of the names or putting some extra capital or extra funds to try and buy all of these three stocks. That's a very, I think it could probably turn out to be a very wise decision.
Okay, this one more coming your way, Kunal, from Anand N from Gurgaon, and he wants to invest approximately 1 lakh each in Kotak Mahindra Bank and ITC for the medium term at current price. Make sense?
Well, I would suggest ITC is a very good bet even at current levels of 435, 445 on the spot levels. At least for the next 2 years or so. And for Kotak Mahindra Bank, I think a better bet actually could be HDFC Bank, even at current levels. So my belief is that stocks are just starting to get into a recovery phase of a huge underperformance, and we've rarely seen that large cap stocks, they remain as laggards in a bull market which just about gets into a priming mode. So I believe that there's a lot more higher possibility that HDFC Bank could make a strong comeback. You can maybe even look at ICICI Bank as another alternative from the private sector banking names instead of Kotak Bank.
Okay, Ashish, the next query is from Pradeep from Kolkata, and he wants your advice on 3 counters, whether or not to make a fresh investment in any of these names. He has Indigo, Grasim as well as TT Power on radar. He wants to stay invested for from 6 months to 1 year maybe. So what's your advice on these 3 names?
Well, I think Indigo run-up has been very significant. Now, if 6 months to 1 year is all that he has, I would say at best a hold. I mean, would not suggest fresh investments at this level, certainly. Although it is a clear leader in the aviation space, but aviation space also is subject to a lot of risks, including aviation fuel prices and regulatory changes and various other things. So it's run up a lot. I think it would best be just to hold on, don't add more. And if you can just repeat the other 2 stocks which you were asking.
Grasim, any of these names you like for a fresh entry at this point?
Which are the other 2 stocks, sorry?
TD Power and Grasim.
Grasim certainly is a great stock to buy at this level. I think Grasim is the one which you should choose, and it has somewhat remained somewhat underperformed, but I think the scope ahead is pretty huge. Summer value part is really emerging, and this could be a very good, very interesting stock going forward.
Okay, fine. This one is coming in from Parth Anand from Punjab. Himmat Singh side, 200 shares at a price of around 115 rupees per share. Kunal, how is it looking on the charts to you?
Looks to be an attractive proposition at current levels. I think it's trading at 114 levels. The long-term support for the stock is closer to 70-75 from where the stock has bounced off, I think 2-3 months back. So chart patterns are attractive. The stock is placed at a cusp of a turnaround. It's filling a major gap on the long-term charts. I think on the weekly charts it's more prominent, and the gap is almost of 2022, so almost a year-old gap. So the stock is trying to fill those gap levels. So I think all of that should augur very well for Himatsika's idea. I think you could consider buying the stock.
Okay, the next question is on Shalby, Ashish. The question is from Suresh from Kerala, and he's holding 100 shares of Shalby at a price of 164 rupees. Can he buy more stocks at current market price? He's sitting at a mild loss, mild profits. So what's the outlook going ahead?
Well, Shelby, I haven't tracked, so I would no comment on it.
Okay, anything on technical front, Kunal?
I think it looks attractive. In fact, the stock has come back towards a swing high, I think a 1 year high. For itself, it's still far off from its long-term highs or all-time high levels of, I think, around 250 or 260, and the 2022-21 high for the stock, which is around 214 mark. So, which means that the stock should do well. We've seen a phase where many of these pharma stocks, hospital names, etc., are doing exceptionally well. So, I think you should probably stick with Shalby Hotels for at least another 1.5 odd year. On a conservative basis, I think 214 to 15 could be a target for the next 12 months, but on a more of a optimistic basis, I would believe 250, 260 could be scalable as well.
Okay, this one is coming your way, Kunal. This one is coming from Divya, and she wants to know, for 1 year perspective, out of the couple of stocks that she's mentioned, which two stand out to you? Piramal Enterprises, Nava, Power Grid, and Green Panel.
Piramal Enterprises. I think it looks extremely attractive at a cusp of a turnaround. I think at 765, 770, we had also given a buy call on Piramal Enterprises. It went ex-dividend of 31 rupees. Now trading at, I think, 900, 920 the last I had seen. Looks very attractive and potentially could see a significant upside from current levels.
Okay, but with this, viewers, let's kickstart taking all your queries in the rapid fire session. And the first question is for you, Kunal. It's from Balan, and he's holding Brigade Enterprise shares at a price of 440 rupees. Is that a hold or shift?
I think it's a book profit.
All right, Kunal, Rashmi from Gurgaon wants to know short-term target for Electra Green.
I think closer to 1020, 1050 could be a good target range.
Okay, Kunal, once again, query for you. It's from Nagesh, and he wants to know about Voltas. Is that a buy on an intraday basis?
Not really.
Okay, Sandeep has RBL Bank at a price of 174 rupees per share. Does it make sense to hold, exit, or invest in something else altogether, Ashish?
I think it makes sense to hold.
Okay, Ashish Krishna Kumar is holding 3,000 shares of Infosys at a price of 1,415 rupees. Should he average at this point?
Yeah, certainly. Go ahead and average.
All right, Pratap from Kochi wants to know, Kunal, Infosys on the charts for the next 1 year. How does it look? More consolidation underway?
Looks very attractive. I think you should start consider to purchase the stock.
Okay, Kunal, the next query is on Union Bank. Hemant is holding 1,400 shares at a price of 67 rupees. What's your short to medium term view on this?
Hold patiently. My longer term targets for Union Bank is more than 100 plus.
Okay, Rajiv, who is a senior citizen from New Delhi, is asking about Indus Towers. What's your take on this, Ashish? He has 6,000 shares at a price of 230. Should he hold on for some more year, 1 more year?
Yeah, I think he can hold on for 1 more year.
Okay, Ashish Ramachandra has purchased 3,000 shares of IRCTC at a price of 740 rupees. What's the outlook going ahead? Should he average at this point?
I don't think he should average more. I think he can continue to hold on. He'll probably get his price.
All right, this one is on Swati, Aavas Finance or M&M Finance. What's your take on this one, Kunal?
Undoubtedly M&M Finance.
Okay, Kunal, Amrita from Gurgaon is holding Newgen Technologies at a price of 695 rupees, and it's been over a year. So can he swap this to Ambuja Cements at current market price?
Yeah, wait for some more time for Newgen. I think the stock should break out to at least 690, 700.
All right, and with that, we come to the end of the rapid fire. Thank you so much, Ashish, as well as Kunal, for joining us on the show, giving us a take on the markets, as well as resolving all the viewer queries. And viewers, with that, we're totally out of time on this edition of Buy Now, Sell Now. It's a goodbye from Shrishti, myself, and the team that put the show together. We'll see you on Friday.